Stock futures a bid now. We've got a little rally going, 0.25% about in the NASDAQ. Let's talk all things under the sun and ahead of us this week with Peter Andersen. And joining us ahead of a busy second half of this week, Chief Investment Officer and Founder, Andersen Capital Management. Peter, good morning. Thanks for coming back on.
You're welcome.
Great to see you. Market has been choppy, volatile, but we've kind of held one key area, at least I can see on the chart, which is the level from the first week in November. Tell me about what role you think policy is making now as we are a couple months into 2025.
Boy, it is so difficult to make any definite statement right now, Oliver. You know, it is such a fluid market based on what the administration is doing. I'm sure tons of other guests have told you the same thing, but we are kind of stuck in this limbo. Even though we're trying to fool ourselves, we're moving forward with resolution. You know, this changes. I mean, I can't think of anything original to say. This changes almost minute by minute. And the fact that when you have Lutnick make that comment yesterday, which of course is probably not off the cuff, but it actually kind of was presented that way, and that moves markets. I mean, what does that tell you in terms of anybody having a compass, anybody sticking to their plan of holding stocks? I don't know who's buying and selling based on this stuff. I'm certainly not, but it does make me wonder, you know, what the discipline is of most investors out there right now.
You don't enjoy Whiplash, Peter? It's not a fun thing for you?
Right. I don't like wearing that collar. You know, it just doesn't complement my shirt and tie when you have to have that big collar on there now.
It is kind of how it feels right now, I think, for anyone who's been trying to, I mean, maybe other than, I guess, like crude oil going down. It seems like something like that has some fair conviction behind it, maybe. Everything else kind of seems up for grabs.
It does. And, you know, prior to this program, I was going to talk up cybersecurity, but of course, that's such a contrarian play based on CrowdStrike's results yesterday. And I know that you were just covering that. But boy, it's very challenging because if you miss guidance, or even in the lower end of guidance now, based on this type of environment we're in, you really get punished well beyond what I think is reasonable. So I would say still stick with those names, and this too shall pass, but it really does try your patience right now.
So you're generally still looking for the secular plays, the themes, the customer bases that are not going to be at the whims of tariff prices or whatever else might be coming that way?
Yes, I think that is a reasonable option. However, as I said, you know, it really does take a lot of courage to stay with that plan. But, you know, everybody needs to have some kind of discipline. You know, if you are an emergency room doctor and somebody comes in there, you know, very, very mortally wounded, they don't just do random things. They have a mnemonic that they go through, you know, so they can kind of keep sane and not be distracted. I think we should do the same thing with stocks, you know, that have dropped 10, 20, 30%. But it's a rare thing, frankly, for investors to do that. And it would be a very valuable thing because it makes you far more objective than emotional and saying, oh my gosh, look at this person on the gurney table. I don't know what to do first. All I know is that they're bleeding out.
I always thought our stock market mnemonic was just BTD.
What's that?
Buy the dip, baby.
Oh, yeah, right.
Peter,
Yeah.
do you think when you look at companies like Nvidia that came off so hard here in the last couple of weeks, and maybe Tesla, obviously there are different stories for each of these companies. How do you kind of go through that process to figure out, all right, which ones are independent? Because like a Tesla, you might, you know, one could argue that's almost a pure policy play to some extent the last couple months.
That's right. And so, you know, say Nvidia comes in the gurney in the emergency room, what do you do? And what I do is I pull out my mnemonic, which was the sell triggers for Nvidia. You know, I think we've discussed that before. I had two sell triggers, the better mousetrap and the Great Enlightenment, you know, and those are shorthand for, is there competition coming on that might be cheaper? And of course, there's a big checkbox, right? And check on that box, yes. And then in terms of the Great Enlightenment, which means are companies starting to say, are we spending too much on this? Have we kind of gotten ahead of ourselves? And I would say that is not a capitalized yes, but it is a yes. And so I am totally out of Nvidia. I've owned that stock for over 10 years, so it was quite a divorce for me. But I was ending that relationship about 4 days ago when I found a better trade.
CrowdStrike and what else? Tell me more about the better trades.
Okay. This is almost a gift, I think, that was given to us. And it's a little bit complicated, but let me just explain the situation. So NATO, you know that Trump is not very much in favor of NATO and the funding, and he's been very critical of the members not paying at least their 2% of GDP. Well, it turns out last November, if you track this, last November was the first time we saw an inflection point, and now those members are paying greater than 2% of their GDP. So that signals military defense buildup in Europe. Secondly, you've got the new chancellor elected in Germany, and he is very, very defense oriented. And then we have to throw in the whole Ukrainian situation. So this all adds up to a wonderful buy signal for some of the ADRs, the American Depository Receipts, for European aerospace and defense companies such as BAE Aerospace, Rolls-Royce, and Airbus. So I have actually sold Nvidia, and I'm now placing a fairly confident position on Euro aerospace and defense.
Like that. And it does seem that Europeans coming to the defense trade has been a factor for some of their economic pickup and activity too, according to our own international research team. They've talked to us about that. Okay, Peter, stocks. I love that you are still laser focused on picking the stock stories. When you think about other parts of the portfolio, bonds, gold, any of that other stuff you feel play a major role right now, or is stock picking basically the best way to immunize yourself from some of these headline swings?
Well, years ago, I used to have to do that, Oliver. I used to have to recommend for clients a completely diversified portfolio. I am happy to tell you that since I launched my own business, I'm just focused on one equity strategy. So it makes life a lot simpler for me. I leave the allocation to other specialists in terms of their financial advice. I would say, though, in passing, that I've never been a fan of, over diversification, the pie chart where you have 15 different sectors and they, contribute maybe 2 or 3% slice of that pie. And I also think gold is, frankly, almost like crypto in the sense that I can't analyze it. I don't have any kind of process to value it, answer the question, what is the fair value? What will it be a year from now? It's very complicated, but I know a lot of other people support that, and not to criticize that process.
No, fair point. Peter, always like your thoughts, always an interesting perspective. Appreciate it.
You're welcome.
All right, some love for CrowdStrike and some love for European defense companies. Peter Andersen, Chief Investment Officer, founder, Andersen Capital Management. No love for Nvidia, no mas.